Hey traders, what's going on? Jamie Saettele here. It is Wednesday, March 21st, 2018, the day of Powell's first FOMC press conference and all that jazz. We will touch a little bit on that actually today, but I'm going to start with some charts of the dollar. First, let me know that you can hear me and that you can see the screens. Rizwan says yes, great. Okay, so I'm assuming that's good for everybody. We are going to revisit the dollar analog that we have not looked at in quite a while. So we've had to do, some slight adjustments here. Recall it was more like this before, right? Well, if we just move the low over, you actually get a pretty good match, okay, with all of this terrible sideways action that we've had really since February started. So I thought this was interesting to revisit heading into today with, FOMC, based also on the levels that we're pressing into. Based also on the levels that we're pressing into in both DXY and US dollar, right, the FXCM index. So again, when you look at this, it says basically lower, through the end of March, which really only goes through next week, and then we could turn up again. All right, so I'm not so concerned with the turning up part. I'm more concerned with the turning down part like now. All right, so keep that in mind. We want to look at some other DXY charts here. All right, this is the one that we've been focusing on a lot in the swing updates. DXY, again, it could be something that's significant on the downside, just simply based on the fact that you have broken this trend line and consolidated around it for so long. Heading into today, I would, 11,689, 99 is essentially resistance. Quite amazing and quite obvious just how stop run like the markets have been. I mean, you have yesterday's rally seemingly out of nowhere, day before Fed, and then we've already retraced most of that rally today before FOMC's even happened. So, obviously resistance up here. The trading has been awfully tricky, of course, but I'm still, looking for resistance in a top, in a rollover, and something down towards the bottom of the range over the next week plus, right? Week and a half. DXY, same story, log scale. Right, essentially trading between these two parallels pretty tight, and again looking for DXY to roll over. I want to bring in something a little different. So here is DXY, or sorry, this is US dollar on my other platform here, and what we are looking at, you've got the square root levels here, right? So I've got a link on the swing updates that explain the square root levels, but they're just great points of reference. And you can see here that bottoming down on the fourth square root level a couple times this year, right? Late Jan, mid-February. I've also got the month opening price on here. And this is the old median line from the shift fork that goes back to the January 2017 high. All right. Now, if we get a quick dollar spike today, which I'm not discounting at all, that could very well happen. I would expect to see resistance right on that median line. So just keep the month open, 11,712 in mind for US dollar. I also thought it's interesting that that is also the close, the exact close of the full-on breakdown day from January 12th, right? Right here. So that's a big level to pay attention to. clearly you've got the median line, which was support, and then the break, of course, on 112. So pay attention to that price level. If we look at DXY and the square root levels here, you can get a good sense. Month open 90.65, trading right on this 2 square roots down. You can see that also 4 square roots down nailed the lows in January and February. And this second square root level down, which is 90.36, has been pretty good resistance. You know, basically it will support and resistance since 115. So consolidation, break, resistance, false break, and then resistance essentially since 3.9. So some good levels to pay attention to there, I believe, for DXY and US dollar. And yeah, heading into Fed today would not be at all surprising. In fact, I'd kind of welcome it. I'd like to see a quick spike, say in the dollar, and then take us lower in the dollar and higher in euro, et cetera, et cetera. So that's what my focus is on. I'll get into specific trade strategy and what I'll be focusing on heading into today. First, let's go. I want to look at, actually, usually we go right to euro. We're going to look at dollar CNH. So this is the dollar Chinese yuan. And I hadn't looked at this in a while, and I don't know why. But to me, it's kind of what could be essentially the tell, if you will, okay, for the dollar in general. So if we overlay, first of all, if we overlay, say, dollar, we'll just do the US dollar. All right. Pretty good, okay. General dollar direction actually in the Chinese yuan have been, you know, it's kind of been one and the same here. So this is the, like, go where it's clearest, and this actually is extremely clear to me, this chart pattern. Look at this price action. Everything since 2.7 to me looks as clear as day, you know, triangle clear as day, right? Again, if you get a quick spike, I'd be looking at the 55-day average for resistance. Okay, it's been resistance a number of times over the last you know, year plus. So ultimately, I think that we should err on the side of downside, right, in the dollar, especially based on this one chart, dollar CNH, Chinese yuan. Dollar lower into the lower parallel to make complete 5 waves down, right? And then we can talk about maybe getting a much more important dollar low in place. Okay, this chart, I think right now, is probably the most important one in FX, in my opinion. And where could it take us? Well, I'm looking at essentially the April 2015 low at some point. Could be a little lower, of course. You know, want to pay attention to just the 1-3 line on this chart. But you can see here, April 2015 low. That would be you know, about 618.80. So a good move, a solid move lower from here. And if we get that, dollar across the board should probably get hit pretty good. Okay, at least that is what I see from, you know, the correlations that we've had is tightened up recently. This was also a tell. I believe we also talked about this chart back in December during a webinar, because we had a very similar setup in that we had a 4th wave going on, and so we were looking lower, and it should drag the entire dollar complex lower as a result, and it did. That's when we had the very big decline in December and January, right? So same position here, a little different degree, smaller degree, because it's a 4th wave of one smaller degree than this 4th wave, but the same idea, okay? All right, so let's move on now. We can go to euro. Yes, Mahai, what's going on? How are you? Yep, we'll look at the equity indices, no doubt. All right. My belief here with Euro is that we still have another high to make. Let's just take it real simple and look at price action from, say, the, October 2017 low. Looks like a 1, 2, 3. This entire mess here looks like a 4. One more high 5. This is favored / suggested by the chart I just showed you, which is dollar CNH. Okay. Getting into the nitty gritty, of course, it's been anything but easy of late. Probably been forcing too many trades, but like I said, yes, in the post last night, the near-term picture is not super clear to me because, ideally, look, you have A, B, C. Ideally, we get this over here, on Monday, but we had what was essentially a fake out rally and now this drop, which kind of complicates this to me because it looks, now it looks like, I don't know what it is. It just looks like a mess. So anyway, I'm not so concerned with pattern. Just pay attention to the levels at this point. Like I said, 2302, 2313. All right, you can just look across the chart and kind of see that as a decent level to go into today. Maybe we get in there before FOMC and then turn lower, and then I'd be looking for a low down near 2211, maybe even 2190, which is the month opening price. But you can see the parallels are pretty clean on this chart. This downward sloping parallel here, support back on 3.9. So, would hopefully be looking forward to provide support again. And simply the November to December trend line is down here. Okay. Again, that's going to be closer to the month open 2190. So that's going to be pretty deep. But again, if we get that quick dollar spike heading during FOMC, that would be an ideal spot for a low. All right. So, you can kind of mark it as 2190 to 2220, although I'd probably go more like 2210. Okay. So heading with FOMC, Euro is definitely on my board as far as looking for a bigger low down here, or if we do go higher, then looking for some sort of entry on the long side. Again, this is based on the dollar, needing to do one more drop, right? That is my belief, so to speak, based on the charts I showed you specifically with dollar CNH. Cable, decent levels this week. Still think we go up here to 141.96. Okay, if you do get that quick dollar spike, like I said, could happen. You would be looking at support literally right about the week open, which is 139.40. Sorry, 139.35, 139.40. Calling it 139.40, but you get the idea. 139.35, and that's also, by the way, I believe you have the 200 period average on a 4-hour chart there. So it's right there, and you can see this average is actually pretty good. More or less support on the way up, resistance, finally broke through. We've seen it provide very precise support and resistance before. This would be an example of potentially what we're talking about with maybe getting a quick spike towards, towards that average and then going higher, something like this, like back in November, right? Quick spike back after you rode along it for a while. So pay attention to that level. Again, if we get the spike on the dollar, you're talking 139.35 probably is support for the British pound, okay, and then higher. So 39.35, 41.90. And again, if we want to see kind of where these longer term parallels come from. That's not it. Is this it? That's not it either. Well, I guess I'll just switch it to daily. Had a cleaner looking chart. Anyway, this is just your trend line, right? And then extended off the high here to make this channel back in 2016 of December. And then you've got the center line, 25 line has been very important ever since September BOE of 2017. And you can see that's the level that's been support a lot this year, right? So that's going to be right on your 39, 35 area as well. We can also take a gander at doing this last night to prepare for the webinar, but we can take a look at the analog that we had previously been following for the British pound, like a while ago, like a year ago. But you can tell me that this doesn't, this works out fairly well. Not perfect, but it does call the highs and lows pretty good. So, I can envision something like this happening, where we end up absolutely going ballistic on the upside in the pound, right? If we go from a more classic kind of charting perspective and take a look at it in this manner. By the way, we're looking at this. This is back from 1989, I believe. So you're looking at this chart right here. Okay, right here. So what we're looking at here from a classical charting perspective is essentially a running wedge possibility. Right, something like that. Where, a lot of people look at wedges and they say, they automatically assume that they're bearish. But they can also be extremely bullish, right? When you go through the top side of the wedge, it's called a running wedge, and you just absolutely soar. That's what makes, kind of a vertical move occur going through the top side of that wedge. It happened in dollar Mexican peso, actually, back in 2014, right? You had what looked like this wedge. Well, it was a wedge, but then it turned into a running wedge, and you broke through the top side and went nuts. So this could be even a bigger one in the British pound, right? I'm just thinking ahead of what could happen and how that analog would make any sense. Fundamental reasons, what have you, whatever, right? I mean, some Brexit thing comes out. I don't know. Okay, who knows? But I just want to put that on the table. Obviously, today, the important things are to pay attention to the levels, and those are going to be, again, 39.35. Kind of have resistance right here, actually, at 40.80 square root level, but then 39.35 and then up towards 41.90s. Okay. Dollar yen. We've also got an analog there. But first, the levels. So somewhat odd, I guess, that the recent stock market sell-off, at least in the U.S., hasn't really been joined by, by dollar yen. But that little divergence probably gets cleared up. I think it gets cleared up with the dollar spike, right? So I'm looking up towards the 107.50 area from here. Okay, that would be two equal legs from the low. Well, two equal legs from the low is actually 107.64, but big slope confluence up here at 107.50. Maybe you get that on the, the dollar spike. You can see very, very short term. We are trading between these two parallels, basically the last day. Could see support at 105.71 again, right here. This is obviously more like guesswork, and I'm not down to trade like that. So for me, let's see what happens after Powell comes out. But 107.50 for me is going to be resistance. Okay, and based on the broader dollar analysis, especially again that dollar CNH in the euro and the possibility of bigger support a little bit lower in euro, this has me thinking that if you do get that quick spike in the dollar on the upside, that 107.50 is going to be pretty decent as for resistance in dollar yen. You can see how clean that parallel is. Just beautiful, nailing highs since early January. So kind of all year there, right? If we go to the analog potential, for dollar yen, so we're essentially looking at price action since the 1990 high, and kind of comparing it to price action since the November 2015 high. And you can see there is a loose resemblance, right? If I put it on line chart, maybe looks a little cleaner. So what we were saying here is that you could basically be more like, yeah, like right about there, right? So get a good rally, maybe again into that 107.50 region. But general point being from this is that, bigger rallies in dollar yen, while they can be, awfully lucrative to catch some of that upside, it's still a downtrend, and we don't want to forget that. Okay, so don't go chasing into 107.50. Now, this is the good thing about this method, or being technical in general, whatever method it is that you do use, and that is we can, we have the ability to change our minds relatively quickly, right? So let's say we get up to 107.50 and we actually blow through it and trade up here, right? We'd actually be looking for support on the top side of this line, right? Because that would represent the break through the top side of the corrective channel. So, thinking a little further ahead, that's something that would change my kind of position on wanting to trade dollar yen, or which direction I'd want to be trading it, right? Anyway, pay attention to 107.50 today. All right. Australian dollar, we're looking at a 4-hour chart here. Been thrown for a bit of a loop, of course, on this one, after being short right here and then getting stopped out right here and then having a massive decline. So again, has not been easy, but a lot of stop runs, fake outs, whatever. Anyway, from here, the levels to pay attention to, in my opinion, it's a lot like Kiwi, obviously, not surprisingly, but essentially you've got massive support down near 76, 76.11. 76 is really big, okay? That's the 2016 trend line. So you can see here, very clean touches, 2016, 27, or that's actually December 2016. And then you've got December 2017. And now we could be there again at some point in late March. So if you do get there, to me, this is a level that probably needs to hold. It would be at least a level that I'd be interested in buying. You also, by the way, would have two equal legs down at 76.11. So right on the trend line there, right about 76. 4-hour chart. again, with something like FOMC, and kind of the unknowns with Powell, you're going to want to respect any sort of potential for kind of what I guess you consider crazier type of moves. So be creative. 76, right, as we just pointed out, but also you've got the resistance level up at 78, which is going to be the 25 line. You can see we are finding support on the 75 line, so there could be something there, right? Don't forget about symmetry. 75 line, if you find support and you go through the median line, you often expect to see resistance at the 25 line, and that would be up right at 78, which is the yearly open. So those two levels for Aussie, those are the big ones for me, right? 76 basically and 78. Kiwi, this is the same chart from last night. We are getting a bit of a bounce after going lower this morning, but would pay attention to 72.20s and 72.70s, right? That same thing, literally the exact same thing I just said about the 25 line, 75 line thing with the Australian dollar is the same thing here. This is actually much cleaner. You've also got the 5-wave move to the upside, right? From November 1, 2, 3, 4, 5. If we can get A, B, C, we would be looking at potentially a massive buying opportunity right around 71. And from a very a broad standpoint, that could actually be a third wave. Let's look at it this way. Hold on. So here's the weekly chart. So this is certainly a possibility. 1, 2, 3, 4, 5, A, B, C, and then this would be 1, and then the next second wave down, finding support again right around 71. That would put you potentially in a third position to go higher, which makes a lot of sense from a standpoint of going up, sideways, and then up again. Okay. So my, bigger picture swing, perspective is I'd like to be looking for longs into 71. Okay. Again, you got trend line. You got 2 legs down. You got the year open. You got 50% retracement from the November low. There's a ton there. Obviously, very near term. It's proper okay to look to fade spikes into 72.30 or even 72.70. Okay. As Europe comes to a close, we are seeing the dollar get smacked around, and we are essentially coming right back to that, or coming into that 23 area that I had talked about as being potential resistance. So, something to keep in mind before FOMC. Dollar CAD, a bear. We're starting to see that NAFTA news come out. I was talking about this. I think I tweeted it last night. Obviously, with crude oil breaking out and everyone dismissing the crude oil Canadian dollar situation, it's because people don't realize that there is different types of crude. You have Western Canadian Select crude, which has been trading at a huge discount for years, and that's basically helped to significantly weaken the crude Canadian dollar correlation. But we're starting to see kind of panicky news come out about that, which suggests to me that we're probably close to some sort of a turn. Okay, let's go. You've seen the long-term charts. Obviously on CAD, I've shared them a lot, but let's go back to them here. So here it is, right? I mean, ding, 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 ding. So you've got that. So far, we failed just shy, obviously, of 3150, which is a 618. Two equal legs was like 31 and change, so we have hit that. It's kind of like when you were up here, and we didn't quite hit the 618 up there either, right? Remember this one? 618 was barely missed. 37.93 was this, or 38.38 was the 618, and we topped at 37.93. So that would have been 45 pips below. This one's even closer. We're talking 26 pips below the 618. All right, so we've got that. We've got the short-term chart to work with, that beautiful looking short-term channel, which is where we're going to turn our attention to now. $29.30 is going to be, that is the parallel, the 25 line from this fork or this channel back from the Feb low. That has been support on each of these drops. Okay, so pay attention to that. Your short setup comes on a rally back at this point to the center line, median line. This would probably be the best, in my opinion, this is the best setup to fade dollar strength heading into FOMC. Okay, because if you get a quick, say we get, drop back in, 29, 10, 30, something like that, and you get a quick spike higher, you're going to look for resistance on the underside of the median line at the square root level, which is 30.22. Okay, right there. It's important that the median line provide resistance up here because it was support for this last run right here. Okay, so look for resistance up there again, 30.22. I have a kind of a list of levels, the biggest ones that I'm going to pay attention to heading into FOMC. Right, we've got them very clear in all these dollar crosses, and I'll just give you a quick rundown of them before we wrap up here a little bit. But this is one of the biggest ones. So the ones that I will be paying close attention to myself as I'm trading will be 30.22 and dollar CAD for a fade. All right, let's look at resistance for, moving averages potentially. Five-day average is a little higher, like 30.45. See what this looks like too. I want to see if there's a bearish fork that could come into play around any of these levels as well. It could. You could see, this is what I would call a highly speculative fork, something drawing this in, but it's at least, worth to be aware that this is there, right? You could come down, tag this. If you bounce from there, make it even more more confidence, if you will, in looking for resistance, say up in this region in the 30.20s, but you don't need that. So 30.22, that's where I'm looking. Now from a downside perspective, obviously the lower channel line is going to be the most important spot at this point. And, that's going to be down in the 28.60s, 28.70s over the next couple of days, really the rest of this week. Wanted to bring in another long-term dollar CAD chart here. So this is one that I think we probably haven't looked at, but I thought it was interesting. It's just draw your channel again from 2007 low and 2011 low, And if you look at it on a monthly basis, I mean, you can just see how many clean, important turns we've had around this level, right? And then right now. So there's a lot up here, okay? Before we go into, say, commodities, stocks, whatnot, why don't we look at some of the crosses? So CAD yen, as I mentioned, for a couple days here, I think made a huge low down here, and I think could absolutely go nuts on the upside. We're kind of at the level right now, actually, where we were talking about maybe getting some sort of a pullback. You know, maybe a 1, 2, 3, 4, 5. Maybe that's, you know, we had the dip overnight, which was 81.40. You know, found some buy signals there from the hourly chart. But this, to me, CAD yen's a buy on dips at this point. Okay, that's all there is to it. So I will leave it at that. Again, I kind of prefer to trade the two separately, as you know. But you know, if we were to get an obvious 3 down or something, then yeah, why not? Like I'll do my best to put it in a timely order or something. But just looking at that daily chart, I mean, you've got just a beautiful, beautiful low down here, and I think CAD yen could absolutely rip. You might not really stop until you get actually to the 25 line, which was the old support from last year, and that's going to be up. You know, that's above 85. So, you know, it's 300 plus pips from now, right? What about Euro CAD? CAD crosses in general. So this is log, right? Log scale. Log scale, we have not hit the channel. We have hit the channel, top channel on arithmetic scale. Given everything I'm seeing from the Canadian dollar, I'd kind of lean towards saying that there's some sort of a high in here, at least for a move back to the median line, which is going to be 56.50. Again, not really interested in trading this. I'd rather trade dollar CAD, euro dollar separately. But what we're seeing with these CAD crosses is promising, in my opinion, or gives me confidence that you've got something special brewing for the Canadian dollar generally. I had a longer term fork in here. Where'd it go? Hold on. Yeah, very clean. All right. Stocks. So we'll look at Dow, S&P, NASDAQ, because we have a request there. DAX, of course, Nikkei. We're going to start with a very long-term chart of the Dow. Okay. We're going to draw it in because for some reason it's not here. So if you go back to the 1930 low and you just draw a channel, oh, Christine's asking about dollar Swiss. I will go there. Give me just a minute. Okay, here we go. So if you draw a channel using the 1932 low, 1982 low, and you extend the upper parallel from 1929, you have this center line, which is like really, really, really big, right? The reason I'm bringing this up is because that center line, if I zoom in on a weekly scale, generally speaking, that center line is pretty important. So if we do get something nasty on the downside in the stock market, that's where you should see support on that center line, okay? I just want you to know that. It's like in 3,000 points, so 4,000 points almost on the downside. So just know that, that's all. Another interesting little piece of info here is that these parallels, you have the same angle on the top as you did back here in 2007. So if we draw in, say, a little more, that's pretty good. All right, so if you go off the tops here, it's more like 59.5. Sorry, this is probably annoying. There you go. So the same angle, same slope off the tops here from 2007 essentially is where we've hit resistance on a long-term basis, okay? I think that's important because it tells me that, you know, we didn't top at a random spot. All right, that's all I'm getting at there. So there's your very long-term Dow chart. Moving in a little bit closer to home, the ones that we were looking at yesterday was this one. And the point here was that the upper parallel from the shift fork into 2009 low, after you had a blowout and we came back to it, that upper parallel was resistance, right? Resistance a number of times, including very recently on 312. So when we look at it that way, and then we can move to the short-term chart, it just gives me a sense, if you will, that you know, maybe selling rallies is the right thing to do, right? And that's why I said to watch the Dow here today, because this chart, okay, this chart is the cleanest one as far as any of its, say, downtrend angles are concerned from a trading basis. So if you draw your channel, simply using this low down here, which was the S&P low, the 2.9 low, you can see median line support, upper parallel resistance, resistance, and then just 2 days ago you had support on the 25 line. Point being is that the market's trading on these parallels, so you have reason to look at this upper parallel as resistance. And oh, by the way, it's also going to be this underside of this trend line, and it's going to be the 618 of this move. So do I know that the market's going to go here and then tank? No, I don't know that. I do know that I know exactly what to look for and exactly what to look at in terms of resistance, and I do not want to see the market go through this level and close up here, because if it does, it probably says that we're not going lower anytime soon. All right, so this to me is an important thing to pay attention to. All right, again, that's going to be about 25,115. S&P, really no solid downtrend levels to look at. That's why I said to look at the Dow levels, because those are the cleanest ones. But in terms of S&P level to know, I would say 2764. That's actually a high volume level from 313. So That's an important level. And if we draw a 618, you're going to get pretty close to that too. Okay. Excuse me. 2760 is going to be your 618 of the move down, the latest swing down from 313. So you've got 2760, 64 for a potential resistance area in the S&P 500. In terms of support for the S&P, you know, the 2700 area is big. We hit it the other day. You know, I like to look at the longer term chart if I'm kind of looking for important supports rather than get lost in the sauce on the short term stuff. But if we start to break down from the 2760s, oh, by the way, 2763 is daily reversal resistance. So we said 2760 to 2764. You have 618, high volume, and daily reversal resistance. I'd say that's really, really big. Okay. If we start to break down from here, I wouldn't be shy about letting it ride for a while, because you're breaking down here, you're breaking down through the longer term parallel here, right? And I really wouldn't want to do anything probably until you got something like a test of the closing low, which would be down at 2594, 2595. 200-day average would also be there. All right. So those are your levels for the S&P. NASDAQ. So when you say NASDAQ, because Mahai, you're the one that asked about it, are we looking at the NAS 100 here? Yes. Yeah, so NASDAQ 100. Okay. So that's what we're going to look at then, this one right here. What's Euro doing right now? Oh, nice. Euro's coming off a little bit. That's good. You see that nice little resistance there in the Euro. Excuse me. All right. Let's look at the NASDAQ. So we're going to start. I mean, let's start with, I don't have anything on here. Let's start with this channel right here, actually, see what this fork looks like here. I want to go long term and work our way in. Pretty good. Pretty good. All right, so sorry, I'm a stickler for getting these things perfect on here. Okay, so pretty good in terms of a very long-term fork up here. You can see when you look at this chart, the 50 line here, or 75 line, sorry, it's actually where we came from on this latest run up. But you have higher resistance than that. So it's more like right there, isn't it? And you can see that right there is beautiful. So you've hit, look at that, and look at all those highs on it. And that's basically where we had support. So that level, which is also the weekly closing, the weekly low right there, that's 6408. That's probably support now. Okay, now we can work our way in a little bit. Here's the daily chart. Here's another example, by the way, of a rising wedge a running wedge. We talked about with the potential for that in the British pound on a larger scale, but you can see what happened there. You had this wedge-like structure, and then when the market broke through it on the upside, came back, tested it, and you had a blowout, and then the whole thing was retraced. So from here, I tell you what, from here, Mahai, what I would want to see, because it does at this point, and we're looking at, you know, this can include overnight, but we're looking at, looks like, you know, 1, 2, maybe 1, 2, 3, maybe this is a 4. We need basically a series of 4th and 5th waves on the downside. But draw in your daily reversal level here. Okay, that's going to be 70.43. And when I look at these points, it looks like to me that you could actually see a good fork from these 3 pivots. So we're going to draw that in. And we have it. We have something very nice there. Okay, so this is a verified, what I would call a verified slope or a verified fork, because look at how that was support here. And look at that median line acting as resistance or support, sorry, on the 19th, I guess 2 days ago. So what you want to see then is resistance back on either right here, which is going to be about 69.38, okay? You have a high right here. My guess, Mahai, is that you end up getting something like I was just saying, you end up getting, you know, if you get a 5-wave move down from here, at some point you're going to come back and tag this level 70.45 some point next week. Yeah, I agree with you as far as the Nasdaq. You know, you had the non-confirmation where the Nasdaq went to this new high, and obviously the Dow was nowhere near it. S&P was not at a new high either. So, you know, you need levels to trade on the bear side, and we have that right here. Okay, so here's your levels: 69.37 and 70.43 for resistance. Right? Yes, the S&P. Well, yes. So here was the Nasdaq high up here on March 13th. Right? This was where we were. The S&P was not at a new high. All-time high, right? Nowhere near it. Right, a new high for March, but not all time. And this was, you know, where you were up here in Nasdaq, and the S&P was, you know, over here. Anyway, here's the level. This is the fork to trade on the downside for the S&P. Okay, 69.37, 70.43 resistance. And your bigger support is going to be down at 64.08. Those are the levels I would pay attention to. Let's go to the DAX, and my feeling is that it's probably going to be about the exact same as it's been. And it is. We've consolidated sideways for a while. You can see that daily reversal support right here is the close from 3.5. It's holding support. It was just 2 days ago. I still think the setup here is to sell strength up into the median line. You're going to have the 55 and 200 days up there, and it's going to be higher, obviously. But that's what I'm looking for a short. It doesn't mean we're going to get there. It just means that if we did, I would treat it like a trap, and I'd want to be shorting above the horizontal into the parallel, right? And you can see this parallel here is still holding as support. So tough to be a bear right here, in my opinion. All right, but same thing as we've been looking at. I got to do dollar Swiss because Christine had asked about it, and I do not want to forget that. But let's look at the Nikkei real quick. More or less, Mahai says, so yeah, markets fake move higher across. Yeah, so exactly. And you're seeing it right now with the Dow, right? I mean, well, obviously all markets, but you know, we're seeing this move higher right now in the equity. So look for this move to go higher and look for us to get, you know, 25,000 plus resistance before we go lower. That's where my eyes are today as far as the you know, as far as resistance is concerned in equities in general. All right, Nikkei. Thinking that you're probably in some sort of a triangle pattern here from here, right? Especially from here, because this is a sloppy mess. This is a sloppy mess. Just pay attention to the levels until there's pattern clarity, of which there's none right now. Okay. But you can see for the most part, you are trading between these parallels, median line and 25 line, right? So boom, boom. No clarity here. Just know that you're at support. That's all I want to get across. You're at support in the Nikkei. So would not be surprised to see a pretty good bounce. Here is gold. I had a question on that. And then I got to do dollar Swiss. Gold has been a whole lot of nothing for a whole lot of long time. And if I'm right that we could get a dollar spike, then we could get something nasty today and maybe get back to 1300. If we do, pay attention to this line right here. Okay, that's going to be right at 1300. Whether it's today or a couple days, I don't know. But I'd want to see that hold for, you know, to stay any sort of constructive at all on gold, right? If you don't get that, then I think you're probably in trouble, or gold's probably in trouble, I should say. So that's really it. I'm not going to waste a lot of time on gold here because I think it's an uptrend, but it's going to try to get everyone off board before it can go higher. That's what markets do, right? They don't reward everyone, or most people for that matter. So 1300, all about 1300. You're going to see maybe potentially minor resistance at 1333. And then your daily reversal resistance levels up here, which you can see are quite clean because you have two closes up there. That's going to be 1348. So for the levels for gold, I'd say 1348, 1333, and 1300. Okay. Okay, dollar Swiss. I said I would go there. I haven't gone there yet. So I've got us pretty much right where I would think that we turn if we're going to turn, right? That's the election low. We talked about 95.45 a lot. And I know we've gone a little bit higher than that. We went 95.69 here, but you know, this is general area of resistance. Okay, I mean, you just look back to the left of the chart. You've got all this stuff over here. If we go, you know, near term, a little shorter term, count waves up 1, 2, 3, 4, 5, 6, 7, maybe something like that. You can draw in a channel. On the short-term chart. And you can see that you know exactly where you need to break, right? Put it that way. You need to break down through 94.50 to have what I would consider potential for downside resolution to this upward sloping channel. Until then, there's the possibility that you do try to go a little bit higher. But let's look in. I want to look in at something else here real quick, because I had another chart up here that I wanted to pay attention to. I believe it was this one right here. So we talk about, one of the things we talk about a lot is using the corrective channel method, right? So if you draw your corrective channel, yeah, there you go. So this is what I'm getting at. So if you draw this as a corrective channel, okay, and you can see, I mean, I'm missing by a few ticks here, really splitting hairs, but you can see the essentially support here and then resistance on the underside of the touch, right? Again, we're talking about missing it by like a couple of ticks, but you get the idea. And then you would expect that to be resistance again, and that is 95.80. All right, so again, 95.80. If you get that spike, that quick spike in dollar generally, maybe that's where we go. All right. That's the best I got on dollar Swiss at this moment. But yeah, just use that corrective channel method to kind of understand. All right, it is a little overtime. I have to run. I've got to go do some other stuff. But remember some of the major levels that we're talking about here heading into FOMC. I'll try to rattle some off quickly, but 21.90 to 22.10 in euro. Obviously the 23 to 23.10 resistance, which was basically just hit. We just hit 22.95. Pound dollar 39.40 support, and then basically 42 resistance. Dollar yen, maybe get a spike as high as 107.50, but that would probably be in I don't know if that'd be today because the intersection is a little later. Aussie, essentially 76 and 78 are the levels that I'd be willing to trade. Not a strong conviction there either way. Kiwi levels, and you also have RB and Z. So Kiwi level 72.20, 72.70, and 71 being the major support. And then dollar CAD, the one that I would want to fade if you get a dollar pop, look for resistance at 30.20. Okay, take it down to initial support at 28.70 or so. All right, I will leave you there. Take care. Good luck today. I'll be on Twitter trying to share things when I see them in a timely manner. All right, bye.